Just a couple of things before I go across to our guest, Bala, who's with us. So the top thing to watch, of course, is Russia-Ukraine, right? And rest assured, we will get headlines and we'll have a lot more to deal with when we come back by Monday morning over the weekend, what happens and how the situation on the ground changes. In terms of markets, commodities are the #1 channel, right? Oil, especially how all of what's happening there is translated to weakness in equities here. Commodities stabilized earlier this week. But if you just kind of look at price patterns, and this is not just true for commodities, but anything, after such a violent reaction one way, the stability that comes through, usually does not last. There is one more leg perhaps up. And that is kind of validated on a fundamental basis as well. A lot of commodity watchers, experts, most believe that, in the next 20, 25, 30 days, maybe oil is going to settle perhaps, somewhat higher from where we are, meaningfully higher actually, $15, $20 if you want a range, higher from where we are. That is not exactly good news, great news. The correction has come as a big relief. I mean, from the 140 levels, which was the high, to about 110 or even under 110 that we are at right now. The other big cue, of course, later in the second half of the week next is the Fed meeting, right? 25 basis point, the market is already pricing in. But the market pricing of, interest rates, yields basically, that is the general sort of understanding is that maybe that has got more to do. The 10-year is already at 2, the 30-year in the US is at 2.5, and perhaps, if both rates in US and EU move higher, that means higher rates in emerging markets as well, and that has got consequences for various sectors, banks, etc. Come to mind. So that's basically a short note in terms of things to watch out for as we look ahead. Bala is with us, CMT, and of course, with cashthechaos.com. Jay, of course, has been bearish. His call has been validated with, a fall that we did see. Jay, thanks very much. We got a bit of a rebound this week, 2.5% to be precise on the Nifty, Friday to Friday. What's your sense now?
Thanks for having me on the show, Prashant. I'm working with a temporary bottom for the markets at the moment. The markets may or may not make one more lower lows. When we spoke on Monday evening after the markets closed, I said one more lower low, and then I'm working with a higher, the market's going higher, and then a medium-term lower low. So I am working with the markets going higher on a slightly higher time frame. If the markets were to make one more lower low, it doesn't change the structure. And we are still working with a relief rally for the markets. And that relief rally is going to be a very disruptive and foxy one. And people are likely to get misled and think the downtrend is over. But it's not going to be the case. The market structure points to further lows for the market. But so, at the moment, it's the sentiment has gone excess on one side. And so, tactically short-term, trading bets on the long side. So that's the strategy I'm working with for the going week.
Okay. Hi, Jay. So can you just give us a couple of points that we need to look out for, considering that you are probably expecting another leg of downside for the markets?
See, if you look at the global macros, the dollar index and the euros, which are indications of risk on, risk off, it still says the dollar index hasn't topped yet. So it says the markets are still, moving towards safe haven moves. So, we could get one more push higher, and you could see the dollar index about close to 100. And when it comes to other asset classes, even Bitcoin, which is a good signal of risk on, risk off, that's also pointing to lower lows. So, so the markets are trying to go a little bit lower, but the key for the Indian market is going to be IT. IT is showing some amount of crack here. So 36.5 to 37K on the Nifty IT index, that's a struggle for the markets. And if the markets were to start trading lower, that could drag the market, and that could be the reason for the markets going down. But I think there's a relief rally underway for the pharma sector. So I think the pharma index, Nifty pharma, is likely to hit somewhere towards 13,800. And so there could be long bets over there, and some swing trading potential, not even short-term trading potential. So 1 to 5 day potential in FMCG stocks like HUL, Dabur, and United Spirits.
Got it. So in terms of oil, Any view there? And also, stocks related to oil. Any trades there?
If you recall, Prashant, we had discussed Oil India, ONGC, and Hindustan Oil, and we had identified Oil India as the best bet back in December. The markets were pointing out, I don't know, the markets knew what's going to happen in the geopolitical sense, but the markets were pricing in good moves. But it's a bit late now for picking any oil-related stocks because the move has already happened. When it comes to Brent, as long as Brent is above 106, I think there is still a risk of markets going higher. The all-time high at 147, 148, that's at risk. But I would think the market will go sideways. And like you pointed out in the beginning of the show, commodities do tend to do that. And what we have seen at about 140 for the Brent variety doesn't look like a ultimate top. There's probably one more leg, but it may not come immediately. Probably comes a little bit later.
Okay. Well, Jay, you did mention pharmaceuticals briefly. It was the top gainer on the Nifty, Cipla was rather, on a week-to-date basis. The index itself has outperformed this week. What is your thought? Is it stock-specific? Which stocks would you probably recommend?
Well, definitely it's stock-specific, Ekta. Cipla, I think even though it's near its 52-week highs, I think there is limited upside there, but it can be played for a nimble player. And Laurus Labs is another one that's shaping up well. And the beaten down stock, Lupin, it's finishing a pattern which we probably call as an ending pattern. That ending pattern is likely to give a little bit of flip out for the stock from here. So, I would, from a risk reward perspective, I would consider this as just a relief bounce rather than a medium term move. So, and as the market gets higher, we can then decide to reverse the trade or hold on to it. So Lupin is a very good bet in my opinion, with a stop at about 678. I think it has potential to do 860. And if it were to get much higher, I think probably the medium term move starts. And likewise, now I haven't spoken about chemicals. Chemicals are also looking pretty interesting at this point of time. Granules in particular has probably finished its medium-term correction from the November 2020 high, where we call in technical parlance as the first leg equal to second leg, which we call as the A equal to C. Probably it's a very near perfect move for that stock. So holding 265, I think it's likely to head to somewhere close to 370. And there is even a medium-term potential of it taking out the 2020 high, November high it made, but let it first close about 340.
Jay, briefly, banks have some bounce potential from here?
Yeah, that's right. But it's just a relief rally. It's got a couple of major resistances on the way up. 37,000 is going to be important. And within the sector, SBI, Axis, Federal Bank are likely to be relative outperformers, not outperforming the whole market. Suppose HDFC Bank to drop and SBI is likely to drop lesser. So that's what I mean by relative outperformance. So probably a pair trade out there might make sense. SBI, Axis, Federal Bank are higher in the rank within the sector for me.
Okay. All right, Jay, we're going to leave it on